Welcome to the closing beat, everybody. Happy Wednesday. Hope you had a good day without me yesterday. It was a good day. Not like it was a good day without you. It was a good day. All right, got to spend some time with the little one. Ride some roller coasters. It was a good time. Well, if you're joining us for the first time, this is the Closing Beat, just a quick stock market update show that we do to cover everything that happened in the markets today. The good, the bad, and the ugly. We leave the opinion out of it. We like to share a lot of stats along the way. We do that also with our customers in our weekly classes. We're like the only financial advisor that just keeps teaching customers just to let you know how things work. So I hope you'll keep us in mind there at jazzwealth.com. We can also manage our own portfolios. So you can see our portfolios on there, what we use. We build our own funds rather than go buy funds that have costs to them. And so, of course, no fees or expense ratios or anything like that. We're also playing a game. It's called Guess the Dow. If you want to play along, you go to jazzwealth.com/guess the Dow. No strings attached. Whether you're a customer or not, you pick a guess there. No marketing, no nothing. We won't bug you unless you win. If you win, we'll send you a $100 gift card if you're not a customer. And if you are a customer, then you could choose the $100 gift card, or you could just say, hey, credit my account $100. Doesn't affect your Roth IRAs, or any account contribution limits. We just credit you $100. Our winner last week chose to have her account credited, so we did that for her. And hope you'll play along. You can if you'd like. And tomorrow our class for customers is about our new high-interest savings and checking accounts. Although if you look at the Fed, they don't want you to save your money. They want you to go spend it. They keep trying to cut rates. We're going to cover some of that here as we go. But we're going to go over that for our customers free, totally. If you're one of our customers, you know I've been keeping you updated on this. I just asked some questions about a year ago. Why don't we get high interest on our checking accounts as well? And why does this all have to be so complicated to know how rates are calculated and everything? And so after about a year's worth of work, we now have that set up for you guys if you want to participate. So I'll cover that tomorrow in our class tomorrow night, 8 o'clock, if you want to join us for that. Let's talk about the stock markets. 19 points on the Dow. S&P added 8. The NASDAQ added 15. I'll tell you, if you're one of those bulls that you want the market to break to new highs, today was pretty telling. I mean, it really seemed like the market was holding in there, ready to break to new highs. You had Boeing, Caterpillar, both miss on earnings. Those are both two of the heaviest weighted stocks in the Dow. They both missed on earnings, and not by a little bit. We'll cover that there for you. Texas Instruments had its worst earnings gap down in over 10 years. You know that's a big semiconductor stock. We always go over the semiconductors here. Whirlpool reported earnings that basically disappointed, and the markets shrugged it off. They basically just held up. In fact, we already knew all of this before the markets even opened, and the markets just pretty much opened evenly. It was just like really no big deal there. The S&P 500, we'll go over it, keeps bumping its head across these highs here. This is the known resistance area that everybody's looking at. We keep bumping our head right here about 30-20, we'll just call it 30-30 at these highs. Last time we hit it there, we pulled back 7% after the first attempt. Couldn't do it, rallied back up there, pulled back 6% after that. This time we're trying to bump our head up in there, and a lot of people that want the markets to pull back go, we're basically going to get the decline we're looking for. But the people that want the markets to break out, you kind of like what happened today. I don't know. I just thought it was kind of interesting how we shrugged off all kinds of bad news, and the markets just still remain poised to break out to new highs there. So that's the S&P 500. You look over at the Dow, a little bit weaker still. Of course, Boeing, Caterpillar, and stuff, although they had really not that bad of days compared to how they were. That's holding things back there a little bit in the Dow. And then the NASDAQ, same position, right? Just hinting at breaking a new highs there. A little choppy in the short term, but I think it's okay. Most people like the fact that it's above this line here. I drew a line. I just draw lines to make it easy to talk about. But a lot of people like right there the fact that we're holding above a known resistance area, big area where lots of shares traded hands to the downside. And so we're staying above that. You can see how we're holding perfectly there. So if you're a NASDAQ person, you kind of like that. And if you're a Russell 2000 person, hey, it's still going, right? Although we're in this big, sloppy, choppy range here, the Russell's really pushing ahead and has shown many days where it's outperformed the overall market and just didn't really care what the rest of the indices did. Everything's looking still pretty good for the Russell there. We'll keep cheering it on there. You've got 181 names that have reported earnings already in the S&P 500. 81% of them have beat expectations. Now remember, we lowered the bar, right? So coming into earnings season, a lot of analysts said, we don't expect this from you guys, we expect this. So show us you can beat this. So we've already lowered the bar and we're beating that new low bar. It's a bit of a game we play on Wall Street there. But anyways, 81% have a beat, and that's a good thing, right? We also have the Fed meeting coming out. I believe it's next week. They're going to be quiet. You're not going to hear anything from the Fed between now and then. We talked about this on Monday. There is currently a 93.5% chance, traders are betting on a 93.5% chance that there will be a rate cut going into November here. 67.8% chance that they'll cut again in December by at least 25 basis points, or by 25 basis points, I should say it that way. So we'll see. We got the meeting coming up here, and we'll see what they decide. In the meantime, silence. We won't have to hear a single thing from them. Let's go over some of the individual sectors here. And if you have any questions, remember, I'll take those at the end for you, try to help you out. Semiconductors, largely lower on the day. You know where I stand on this if you've been watching for a while, but down by about 2% on the day. A lot of that's going to be because of Texas Instruments. So I mentioned this a second ago. Texas Instruments had its worst gap down, meaning from yesterday to today, the change in the price, had its worst change, well, since 2008. I believe it was April 2008, if I had notes, I'd tell you. But they missed on earnings there. Revenue was weaker than expected. The company says that we're still in the slowdown. Now, they've been no stranger to suggesting that we have a slowdown in growth there. So that's been sort of public. They're not trying to hide from that. It's the fourth straight quarter that they've reported a slowdown in growth, or negative growth, if you want to look at it that way. And Texas Instruments themselves in the past, I believe it was the second quarter of negative growth, they said, yeah, this happens, and typically it lasts 4 to 5 quarters where we have negative growth. This is the fourth quarter. Does that mean we're about ready to come out of this here? Their words, not mine. They're the ones that have studied this about their particular business. And so we'll see. We've obviously got a ways to go, but in the meantime, the stock price has fallen by 7.5%. And if you follow the subsectors here, semiconductors pulled back just a little bit on the day because of that. Your largest holder in the semiconductors remains overbought in the short term. I'll continue to say that. And so a little bit of weakness there as well. It lost about 1%. You'd fully expect this to pull back, and it would be okay if it pulled back. This is Taiwan Semiconductors, by the way. And so that's what you have there going on in the semiconductors, so you got some weakness there. Regional banks, or banks in general, we've seen a little bit of a rally there. Regional banks continue to move back up to this downtrend line. I'll tell you, the technical traders look at this right here. So everybody's got their line drawn on the chart. That's it. Just a series of highs that they can mark in the midst of a downtrend. And so what happens now is people start looking at this area going, uh-oh, we've had troubles here before, and it's not a guess. We can look back and see it's clearly had some troubles here. And so people will look back and say, well, what's my risk? Well, if you look back, you go back to this guy here and you say, well, all right, this one's fallen down a little bit. We've had a 10% pullback since then. Then we had a rally that came back up, not quite as strong, but we had a 10% pullback since then. We had a rally back up there and we had a 10%, just about a 10% pullback since hitting those highs. So your risk you would define as it's about 10%, right? We hit this high here and we fall just over 10%, you would think, okay, I shouldn't be participating. Now in reality, this is a little bit stronger because from here down to this prior low is about 8.5%. So you have everybody saying, okay, anything under this line, they would call it quits, the technical traders. And so at the moment, if you're bullish on the regional banks, they had great earnings, State Street, all these names had great earnings that helped out. But if you're bullish, you want to just see it break out so that none of this ever becomes a concern again, but just giving you a little guidance on that in terms of where it's at and what people think when you hit these different areas there. Home builders remains a little bit overextended. We talked about this on Monday. You fully expect that to pull back a little bit as well. And it would be okay if it, quote, took a break, right? That's how we're looking at it. Just take a break. Don't break the uptrend and get all nasty, but just pull back a little bit. Give people a pullback or a discount that most people have been waiting for in the home builders. So that's the XHB. You got oil a little bit higher today, 2.5%. Wednesdays are oil inventory numbers. Unless Monday is a holiday, then it becomes Thursday. So Wednesdays of every week, we get inventory numbers there. We're back up to the 50-day moving average and actually closed above it there by the end of the electronic session of trading. At the end of the physical trading of oil, we were right at the 50-day, so a little light volume above the 50-day there. People won't count that as necessarily an official break. The inventory numbers came in. We saw a drawdown of 2.7 million barrels. We were expecting there to be an increase of 2.2 million barrels. So not only were we off by the numbers, the analyst expectations, but we were off on the direction, right? So a good day for oil there overall. And if you happen to look around through like the oil service stocks, which have been coming off of their lows a little bit, you see more positivity there. Got 1% on the OIH there. And if you happen to look at the XOP or the exploring stocks there, they've been coming off their lows as well, although really, really weak. Like I said on Monday, still way too early to assume you found a bottom in these sectors. In my opinion, I take it for whatever it's worth, but That's where we're at there. Healthcare continues to plow ahead. So there's been this shift over the last couple of weeks. I've tried to point it out to you where analysts are now becoming more bullish on this sector in the 12-month time period. Anytime an analyst gives a comment, they're usually talking about the 12-month time period. And so they become more bullish, right? Some of these names, that now that we're settling the opioid issues there, the cases that have been going on, a lot of big names now have actual numbers that they can put to paper to say, yep, this is the cost of, well, that problem that they had there. And so now that they can put that behind us, analysts can take that number and they can look at the company and say, well, how does that result in a change in their earnings, a change in their the reporting of the earnings that they have there. And so a lot of people are becoming bullish on this one. Now you got to be careful because it's basically been sideways and choppy here for a while. So you got a whole lot of nothing going on there. But in the ultra short term, not bad, not bad. A little bit of a rally there in healthcare. What else? Other things to point out. Gold miners were up 1% today, but still stuck in the middle of that downtrend. And everything else was basically up or down just a fraction of a percent. Not a whole lot to really go on there. So we'll go over to individual stocks. We talked about Texas Instruments, so let's move on to Boeing. What a wild ride Boeing has been on there. We talked about this on Monday being a 17% decline. Do you like that discount? But we were mentioning the earnings there. That's a tough one. Earnings came out. And they missed by a mile on earnings, right? If you follow this sort of thing. Now, everybody wasn't looking at earnings. They were sort of looking at the non-GAAP earnings there. It was a little bit geeky in that sense. But all in all, the positivity from today comes because they didn't delay anything on the 737 MAX. A lot of people were expecting them to say, you know what, maybe it's not going to be the fourth quarter that we get this thing back up in the air. Maybe it's going to be first quarter of next year. But they didn't change. They said fourth quarter. We still want to get it up and running by fourth quarter, and we're working at it. And we believe that it will get up and running by the fourth quarter, despite what the airlines have already projected. And so because of that, people were like, okay, great, things must be going well. They're going to figure this thing out. They also said they're going to stop buying back shares, which a lot of people sort of applauded, although that hurts a little bit in the short term, at least from what I read. So they're going to stop their share. They got a massive share buyback program going on. So Boeing was a little positive on the day. Caterpillar. So Caterpillar, this was a big miss as well. And a lot of people look at Caterpillar as sort of a barometer of the global economy. Caterpillar actually started the day quite a bit lower there. They missed on earnings, missed on revenue. They cut their full year forecast for the rest of this year anyways, because of weakness in the construction equipment. But a lot of people looked at that and said, wait a minute, you're cutting these forecasts, but yet we see that it was really just an inventory issue, and that wasn't necessarily slowdown. So we dug a little bit deeper. Earnings missed by 8%, which is a large miss. Revenue missed by 5%, also a very large miss. Worldwide machinery sales were up 2%. That's the biggest uptick since April of last year. So you're like, okay, I don't see this weakening forecast that you guys are talking about because we're seeing an uptick in worldwide machinery sales. If you look at North America, they've been in a steady downtrend as far as overall sales. They got bumped up to 11% from 6% there. Asia was the only weak area there, down 8%. Occasionally, I share this sort of thing with customers when we do our portfolio updates, but because of where this earnings announcement was relative to our updates, I'm just sharing it with everybody here. But I usually pull out the charts and we show kind of where all of this is to customers there. But other than that, basically, like people they're questioning where Caterpillar's at. Are you trying to lower the bar going forward? Because we don't really see in your numbers like a super strong slowdown there. And so Caterpillar was a little higher on the day. Whirlpool, wild ride for Whirlpool, up 1% on the day there. They beat on earnings, missed on revenue. Lower sales in Latin America was where the sort of focus was temporarily there. However, you got to look deeper in these. So we always track the companies that get these international companies. What percentage of their revenues come from the U.S. and what percentage of revenues come from overseas? Well, 59% of their revenues still come here from the U.S. What happened with Whirlpool, if you care, Whirlpool basically said, okay, higher aluminum costs, import costs, tariff costs on the Chinese aluminum that they have. They thought, as of their last earnings, we're going to have to pass this on to the customer. We're going to have to raise prices and everything. They actually held off on doing that and were still able to basically get to the numbers that everybody was expecting there. So 59% of their revenue comes from North America. And if you look at their profit margin in North America, it actually ticked higher. What that tells you, so we went from 12% to 12.8%. All this tells you, if I'm just rambling, but all this tells you is that their profit margin was higher. So even if they have to raise costs, it shouldn't hurt them too bad overall. And so after people got to digest the numbers a little bit, the stock actually finished the day higher by, 1% on the day. So not bad there. I got a bunch more to cover here. Snapchat down 6% on the day. They actually beat on earnings. Remember, we talked about this Monday. They were expected to lose 6 cents a share. They lost 4 cents a share. So it was a 2-cent better than expected, but still a loss, right? They beat on revenue as well, and their average revenue per user, daily active user is how they report this, was also higher than expected. So all in all, it wasn't too bad there. Some comments from management there, and forward guidance not so great. So the stock down about 6% on the day, which is good for those of you that want to buy it, right? More of a discount. Maybe now's not the time to dive in, but more of a discount. Also, I thought I'd point out Beyond Meats. We talked about this gap fill area here on Monday or last Friday. I can't remember. And so we've come all the way down to that area, and nobody cared. So typically this acts as support, also the psychological $100 number. You can see nobody cared today. Not only did we break through it, but we closed below it. And on a closing basis, you'll hear that word a lot. On a closing basis, you would say this stock looks weak because it closed below all the support that everybody would have expected it to hold at. Now, in the short term, she's pretty extended here to the downside. Any sort of washout day or a big down day on heavy volume, you would really expect people to come in and try to bottom pick this thing. I bet you'd even see some analysts say, hey, it's not that bad, and they would probably make some adjustments to their comments there. We'll try to keep up with it there. So we broke the $100 number. Next week, I believe it's Tuesday of next week, the lockup period ends for the IPO shares there. So people are expecting more weakness there. There's a ton of shares coming out. So we'll see. That's a tough one there. But I want to point out, this is why you don't chase the exciting move of the day or of the month or whatever there is. So think about it. What happened to Bitcoin? That was all the rage for a while. Just play this in your head. I'm not bashing on any of them there, but just play this in your head for a second. Bitcoin was all the rage for a while there. It was super duper exciting. Everybody had to have Bitcoin. It was very, very exciting. Stock price took off. Everybody got excited. And just like the old tulip mania back in the day, it started to fade away. Not saying that this is dead and it'll never bounce back, but you got to watch out for chasing things when everybody's excited. So that's Bitcoin. What about pot stocks? Remember that? Pot stocks, all the rage. Everybody's excited. You got to have pot stocks. Dustin, what companies are involved in pot stocks? I want to buy them. Big excitement. And then just air comes right out of it, right? Just deflates because everybody goes, wait a minute, they don't make any money. This is crazy. How do you invest in things like this? What happened to Uber? All the excitement around Uber. They don't make any money. Stock falls. What happened to Lyft? They don't make any money. Stock falls. What happened to Slack? Right? The most recent one here. Slack. Stock falls. So they don't make any money. So be careful chasing a lot of these names, a lot of these exciting areas that you just feel are overdone. When everybody's excited about something, is that the time you want to buy it? Now, out of everything I mentioned today, there may be something like Bitcoin, like Slack or Beyond Meats or whatever that you believe in, right? If you really believe in something, you will never miss the ultimate move, right? If you just let people get excited and say, that's fine, go ahead, get excited. When you guys are scared, that's when I'll dive in, start building a position for whatever you believe in. I'm not suggesting any of those there, but if you're looking at something like Beyond Meats, that's now 60% off of highs. So if you really like this plant-based protein sort of thing, and you like that company, you really see something there, then 60% discount versus chasing it on the way up. Remember that, because tomorrow, maybe next week or a month after that, there's going to be something that was exciting, that is really exciting. I saw a great study today on FANG stocks and how they really didn't perform. In the last 12 months, they're up 3%. Look at the stock market. Where's the stock market at? Where are the FANG stocks? But that was all exciting for a while. So be very, very careful on the things, sectors, products, investments that you get excited on. Try to get excited when nobody else is excited. Then you have time to do the research that you want to do and see if it's a good fit for you. We have time to digest numbers when you don't have to chase and run, dive into a stock. I'll keep pointing them out because I promise you that list will expand and there will always be something there to focus on. 66% of the stocks in the S&P were above the 50-day moving average. That's right where I left you on Monday, so nothing new to mention there. 18 stocks made new 52-week highs today. Not bad. You had 4 REITs in the mix there. So 4 REITs. You had Weyerhaeuser, or I think you say it Weyerhaeuser. We say Weyerhaeuser because we're in a warehouse here. So up 1.3%. We own this one. A little extended in the short term. You may want to see it take a little bit of a break. If you happen to own it, you wouldn't mind if a few days pulled back. Not a big deal. We also own Apple. That moved to new highs today. And the only reason it really moved to new highs just on this momentum, the excitement of the stock doing really well. Morgan Stanley raised their price target to $289, I believe, A little rusty with my notes. 289 somewhere. Yeah, they raised it from 289 from 247. So just another analyst upgrading their price target there, getting into the mix, grabbing a little attention. Oh, that's not the stock. Eli Lilly is the only stock that made new lows today, new 52-week lows, but closed well off of its lows. Everybody that saw that breakdown today assumed that would be a good discount to buy after the stock being down already. And also maybe some stop losses there early in the day because that was a pretty obvious support area. So anybody that wanted to get out if it broke that area likely did so this morning. And the lighter volume swooped in there to be able to buy those discounts, which gives you some of the bigger move there. As far as our stats plays there, you got LHX, which is L3. Still working on making its way up here to the line there. Remember, you got a 75% chance of being higher by 2.58%. It's got 2 more days to go. You don't like to see when this is just not following through. Like you're supposed to get a move on, right? And start headed towards that target. Not really doing it there, so you're losing excitement there. CVS did come down and hit that target. This was the downside one that we had. 62.1% of the time, it's lower by 1.34%. I believe it actually was lower by 1.35%. So it did hit the target there. We're done with CVS following along. Only took 3 days for that one to happen. That's about all I got for you. 150 stocks are set to report earnings tomorrow. It'll officially be the busiest day for the S&P 500 in terms of stocks reporting. So it's the busiest day of the season. I don't know what you got planned, but you know, chances are you own something that's reporting earnings tomorrow, so keep an eye on that. And side note, starting tomorrow, the Fed, I believe it starts tonight, but for Thursday, the Fed is raising their daily repo purchases to $120 billion from $75 billion. So whatever they were doing, they didn't think was working good enough. They bumped it up to $120 billion there versus the 75. That's nightly, by the way. That's not $120 billion a month. That's every single day. Does that worry you a little bit? Does something seem a little bit odd about that? Okay, go over the quickly earnings for tomorrow. If you are interested, you've got the most volatile name tomorrow is going to be Twitter. So you know from us talking about this here, Twitter is the most volatile name to report earnings. Average volatility, 12.47% average move on earnings day. So be ready for that. They beat 91% of the time on earnings, 83% of the time on revenue, but we only have 23 reports to go on, right? They're not a very old company in quarterly terms. Average move is actually lower by $2.42. It was flat today ahead of those earnings, so we'll find out what happens tomorrow. You've also got Amazon reporting earnings tomorrow. That'll be one of the big focuses. It comes in after the close, so we'll get a chance to talk about that. They beat 62% of the time on earnings, 69% on revenue. The average earnings day move is positive by $1.18, which doesn't sound like a lot. It's really not a lot. I'll tell you this much, just for fun, looking at some of the data. The last 3 times they missed on earnings, but beat or matched on revenue, the stock was lower initially, gapped lower, by $30 or more, between $30 and $36. When they missed on earnings and revenue, double it, right? In the fourth quarter of 2016, they missed both earnings and revenue, down $63. So just give you an idea of sort of the gun that you're playing with here. It's a volatile one. Unless you want a discount, you're sort of cheering that they don't miss on either earnings or revenue there. Tomorrow, the stock with the highest probability of being positive, which doesn't really help you, I guess, at this point because they report. But if you already own it, the stock with the highest probability of being positive tomorrow is Comcast. They were flat today. They report earnings. They're 63% of the time are they positive on earnings day. The average gap, 1.22%. So if you happen to own the stock, you might be able to at least sleep a little better tonight, although there's obviously a chance that they don't gap higher. At least the odds are in your favor going into that. So we'll cover that tomorrow as well. And in the morning, you've got earnings from American Airlines, Comcast, of course, Dow Chemicals. I don't think they call it that anymore, but not Dow the Dow, but Dow Chemicals. Southwest Airlines, 3M, Raytheon, Twitter, of course. And then after hours, you got Amazon, Capital One, Gilead Sciences. I won't cover that one. And Intel, one of the semiconductors. So it'll be interesting to see after what happened, of course, on Texas Instruments. You got Fastenal paying out 22 cents. Waste Management, that's Williams-Sonoma paying out 48 cents. And that's it there. We also have new home sales coming out tomorrow as well. Nike's getting a new CEO. And now I'll take your questions if you happen to have any. Sorry if I missed some of those there. Oh, you like the bear ETFs? Careful on the bear ETFs. Those will cost you. A lot of people don't see the true cost of those bear ETFs until you actually own it, and then you go, wait, what's going on? Why is this thing drifting lower? It's known as a drag. So if you want to look at the price drag on leveraged inverse ETFs, doesn't matter which one it is, just make sure you know what you're getting into. There's no such thing as these share buyback games, I'll call them. You guys, I like it. Did I say 62% of the time they beat every time? I'm not sure what I said. Obviously, that was wrong. Daniel, so much to learn, but you're taking it all in. Good. Little by little, you'll learn. If you have any questions, of course, I can help. I just can't give specific advice here without getting in an ultra amount of trouble, and I prefer to stay out of trouble. Yeah. Oh, by the way, was it Tesla? You had a couple earnings after hours here. You got Tesla, looks like sharply higher after hours. Maybe beat on earnings, missed on revenue. Ford down 2.5%. They missed on earnings. I think Microsoft was in the mix. Oops, Microsoft in the mix as well. Basically flat. Yeah, they had earnings. You could see that after hours movement there. Earnings and pretty much quiet there. Not really a whole lot going on with Microsoft. Pretty stable there, actually. Yep. Nice. Perfect. Oh boy, you guys are getting into conspiracies and stuff here. I like to stay with the data, you know what I mean? Because if you think about it, historical data includes any possibility of any conspiracy that you guys might have thought of or any world events that may have been going on at the time. So it's closer than trying to make assumptions there. We all have our own thoughts. I agree. I'm not one of those guys though. You're not gonna see me saying the stock market exposed. Yeah, Kimberly-Clark did well. We talked about that one on Monday for the earnings coming up there. Earnings obviously heard it and immediately basically snapped back all of it, about 4% there. People like that discount. Overall, a normally pretty quiet and steady company. I'll bet you a lot of that had to do with options in there. It's a pretty light options market, so when people get stuck, they got to make decisions there. It's a little bit tough. Yeah. Anything? Well, CrowdStrike. Yeah, that's another one that keeps making its way up into the news there. Same thing. It's an IPO. You wish them well, but it's another great example of chasing something that was temporarily exciting. Yeah. Yeah. Starbucks can't find support, is what you're saying. So the 200-day moving average is very likely going to be the support, at least in the short term. That puts you around $81. 81 bucks there. The only negative, I'll tell you, here's a little technical traders like this. The 200-day moving average, which is the red line on this chart, typically acts as support. It's the most widely used moving average that everybody looks at. Most every chart comes preloaded with it actually on there. If you're just hunting around, you type it on a chart, it's usually right there. The problem is every study on the planet shows that this is more effective when it's flat and not rising or declining. So that's the only negative you'd have to go on there. I don't have those actual numbers for Starbucks. I've never done a study on that, but it was a long time ago. We did a great study on all kinds of different stocks, commodities, and markets, and that 200-day moving average. So you would hope that that acts as support. It sounds like you're hoping it acts as support, but we will see. At least you don't have to wait too much longer. At least you're right in there. Aurora Cannabis is another great example of the pot stocks that keep selling off there. This is one that I would not suggest that you try to guess the bottom. I did a video on this in July to suggest when you could buy a stock that's currently dropping. Different ways you could buy the stock, meaning different looks that you'd want to see before you decided to dive in. I would highly suggest that you, have a plan for buying a stock that's declining like that, and maybe see that video there. Yeah. Could you start releasing earnings stats the day before earnings reports to give us a chance to research and buy? Yeah, if they report in the morning, it's tough. Like American Airlines, Comcast, and stuff, it's kind of hard to catch that ahead of time. I'd have to be a day ahead of schedule, which I probably wouldn't be able to do. This is more just for like if you already own it and you're kind of like worried or whatever, at least you know the stats there. But it's a good idea. especially for some of the more popular ones. We covered Amazon and Twitter a while back, just to give you a heads up there. I love it. I love it. I love it. All right. Well, I think I have covered everything for you here today. I appreciate you watching. We'll be back tomorrow, of course, to do this all over again. And yeah, that's all I got for you. Enjoy the rest of your day. Thank you for watching. And we'll see you then.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interests comes before ours.